you can opt out, or at least you can have a foot in both worlds. You can say, I'll use the incumbent system for when I have to, and for kind of local, most people have a bank account and they use it, but I'm going to kind of take that side with a grain of salt because it's only going in one weakening direction, and I'm going to embrace this newer thing, which is Bitcoin, or in some countries also stable coins, but basically really the two applications of this technology that have had really good product market fit, and say I'm going to go into this world instead, and I'm going to store my value in something that isn't diluted by any sort of central entity, and you just kind of opt out and you protect yourself.
Hey guys, welcome back to the show. Today I'm here with a guest who needs no introduction. Lyn, how are you doing today?
I'm good. How are you?
I'm doing great. Thank you so much for doing this with me. I really appreciate. I would like to talk about why our financial system has been failing us and how we can make it better. So let's just jump into it if you don't mind. And I would like to ask you, what is money?
I would say money is basically a ledger that we use to communicate value with each other. And the two main forms that it has taken historically are either physical tokens, where the ledger is more instantiated, but we're basically still moving around these coins and these other objects with each other. And no one's really keeping track of that full ledger, but we're still updating the ledger by possession. And then there's the more literal ledger, which is we abstract the process, and there's some sort of record keeper that's keeping track of who owes what or how many units exist in this given system. And so basically it's ways that we try to keep score and store value and exchange value. Um, and of course, there's other ways you can describe it. It's the most saleable good, right? So if you were to go to trade, what do you bring with you that you have the highest conviction that you could find a buyer for either what you want or something else that you can then trade for what you want. And so money is basically that which has certain characteristics. It's long lasting, it's reasonably portable, it's divisible, at least moderately fungible. It's got a number of good characteristics. It's generally got its scarcity in the sense that it's hard to increase the supply of it rapidly, and yet unintuitively a lot of it's already out there because people have it and accept it. So it's not something so rare like meteorites, for example. It's something that's both a lot of it exists, but it's hard to make more of. Those things in any given technological era tend to become money. They become the most liquid thing you can exchange value with, and it generally becomes a unit of account that other things are compared to.
Do we need banks? What do you think?
Banks serve a purpose in different areas of life over time, right? And their roles has changed. In the earlier times, you'd have basically money changers or Hawaladar networks, and so basically you'd have these kind of proto banks. And basically, what banks do is they provide kind of abstraction, right? So if I want to send value to you or you want to send value to me, especially over long distances, how do we do it? Well, in kind of the older era, it was easier to transport and safer to transport notes that represent a certain amount of precious metal rather than the precious metal each time. And then especially once the telegraph became more and more ubiquitous in the later half of the 1800s, um, we could update ledgers, update value by going through these intermediaries. So people gravitate toward them because they were providing a service. They were basically an abstraction layer on top of the actual money. But then the problem is, and this is what I focus on in the book, is that the gap between transaction speeds, so all that banking layer, became really, really fast compared to the settlement speeds, the ability to actually send gold from, New York to London or whatever, and it's settled now. And so basically, as that gap grew, as we entered the telecommunications age, the early stage of it, we had this whole kind of virtual network of money moving around, and it's just claims moving around for gold that rarely ever moves. And that's a recipe for corruption. It's a recipe for very intense fractional reserve systems. It's a recipe for all sorts of problems. And so even in the late 1800s in the UK, for example, the system was levered 20 to 1. And that was when it was still working fine. That was kind of the classical golden age, the gold standard era. And yet under the surface, it was already highly levered. The way that I generally describe it is that they served a purpose, but that they caused issues along the way. And the way I would describe it now is that with Bitcoin, it basically replaces the need for a central bank. It's this kind of core settlement ledger that if it were to become significantly large, it doesn't mean it replaces it today, but it means that the underlying ability is there to replace something like a central bank. And then I would say that banks would still exist in some form, just on the periphery. They're more optional, right? So instead of we had this kind of situation over time where banks were on the periphery. They would provide certain services, they were optional. Then they gravitated toward being the literal center of the system. Like a dollar is a liability of the Federal Reserve. That's what a dollar is. That's what fiat currencies are. Literally, banks are the center of money now. And I think that we can gravitate back toward no, like banks are not at the center of the system. They just provide services at the periphery of the system for those that want them. And I think that's in long term, that's healthier.
How long do you think we have before the US dollar is going to collapse? And what kind of signal we should be aware of?
I think probably years or decades, but it depends on what you mean by collapse. I mean, I visit Egypt every year and they go through periods of 30-40% inflation. Um, they've never, in the kind of modern history, they've never gone through a hyperinflation. Do we define that as having collapsed? Their money supply averages something like 20% growth per year. It's still functional. People are using it. It's not something you want to save value in. It causes all sorts of issues, but it's there. And I think the U.S. The dollar goes through a very long period before it even gets to that stage. Let alone if we were to define that stage as having collapsed. And I would define like Venezuela's currency as collapsed, but not Egypt's. And I would say that the U.S. has a lot of runway before it looks something like Egypt's currency. Basically, the kind of the variables at play here are the U.S. has growing debts and deficits, and we have a structural trade deficit, and that's all bad for the currency. And on the other side of that, it's got two really big things going for it that are related. One is it's the most liquid and valued currency in the world, so it's the most saleable good among fiat currencies in the world. And so it's what a lot of companies and governments denominate contracts in, provide international financing in, and when you exchange two currencies, 90% of the time, the way you do it is you exchange one for the dollar and then the dollar for the other one. That's where you get the most liquid markets. And so it's entrenched there. And then the other point of that is that the majority of international debts are denominated in dollars. So there's over 13 trillion in dollar denominated debts, plus all sorts of like swaps and options and other layers on top of that. But just literally securities and loans over 13 trillion. And all of that represents inflexible demand for dollars, right? So that's more than the monetary base of dollars. There's more dollars owed to international creditors by various countries and their corporations than dollars exist. So there's more demand than there are dollars, at least base dollars, and nearly as much as broad dollars. And so that's inflexible demand. And so I think that Gordian knot has a very long time to unravel. And I think it's a long process. I don't think anything stops this train anytime, in the next several years.
I mean, what's the way out here? What do you think we should do?
I think basically you have parallel systems, right? So one is going through entropy, meaning it's getting less orderly over time, and it's kind of past its heyday, and now it's got all sorts of issues, but it's still got all those entrenched massive network effects. And then you have rising new technology, new ecosystems, new enthusiasm, and the technology is generally better than it was any given 5-year period ago. And so I think basically the what you can do, depending on what level you're at, is just you can opt out, or at least you can have a foot in both worlds. You can say I'll use the incumbent system for when I have to, and for kind of local, most people have a bank account and they use it, but I'm going to kind of take that side with a grain of salt because it's only going in one weakening direction, and I'm going to embrace this newer thing, which is Bitcoin, or in some countries also stable coins, but basically really the two applications of this technology that have had really good product market fit, and say I'm going to go into this world instead, and I'm going to store my value in something that isn't diluted by any sort of central entity. And I think that's, and then if you're, if you're a corporation or a government, you can do similar. Generally speaking, the smaller the entity, the fewer decision makers, and the larger the entity, the more decision makers, with some exceptions. Um, and you just kind of opt out, and you protect yourself. And I think there's a very long process of more and more people doing it. And then along the way, what we're doing is we're testing this new system. We're saying, how secure is it really? How robust is it really? What needs to be improved about it, either on, say, the base layer or the various layers that click on top of it and enhance it. How can we make this better and truly replace, as many components as possible of the prior um, entropic system?
What was your journey into Bitcoin? How have you discovered it?
For me, it's like a lot of people, it's multiple touch points, right? So, I mean, back in like literally 2010 or 2011, someone was like, "Hey, I'm mining this Bitcoin on my gaming computer," and I thought, "Hey, I have a gaming computer, maybe I should do it." And I never got around to it. And then it has like another bull run in like say 2013, and I'm like, "Oh yeah, it's Bitcoin. Like maybe I should get some." And then I kind of look at the exchanges, and they're really like sketchy looking, and I'm like, "I got to put more time into this. I'll figure it out later," and then I just kind of forget it about it again. I'm, focusing on, like work and relationships and health, and I'm not. It's just Bitcoin wasn't really. It never really kind of hit that threshold for me to actually put the right time into it. By 2017, I was, running my investment research firm, and Bitcoin started to have this bull run again. So I was like, okay, this time I'm gonna actually like dive into this. So I wrote about it, and was had a very favorable opinion of it. But my article came out in November 2017, and I was like, this has become very over enthused. And so I was like, I'm not going to buy it, but it's fascinating. Um, but then I made sure not to mistake, so that when we had this blow off top and then it crashed and it underperformed for years, I kept watching it this time, and so I entered during that bear market. I watched the kind of the block size war play out. I watched, all this other stuff. I kind of saw how Bitcoin behaved. And some of the really simple things that are like kind of stupid in hindsight are like seeing the price chart in logarithmic form, right? Because if you look at it in linear form, it always looks either like a bubble or like a dead bubble. It's never really like, it's not a normal price chart because its price movements were so crazy. So if you look at a price chart in 2013, it looked insane. You look at it in 2017, it looks insane. But after that significant time, you look at the price in log form, you're like, okay, there's actually kind of a cycle here that it's going through. That's interesting. Um, and so simple things like just making sure to follow it in a bear market, and just a couple like clicks is when I got in that whole kind of bear market period.
Remember the days 2017. I been through a few cycles myself, and probably one of the most brutal, which we gone from I think almost 20K down to 3,000. So
Yeah.
it was something for sure. Where do you see Bitcoin? Is a store of value? Is a currency? What's your take?
I mean, I think it's all of it. I think it's money. I think it goes through different adoption periods over time, right? So one of the first things it was used for is a collectible. People liked it because it was the best way of solving something that people have been trying to solve for a while. And then one of the first practical use cases was medium of exchange for WikiLeaks. When basically when other payments are shut down, here's this thing that can still work, right? But then the medium of exchange usage kind of stalled, or at least didn't grow as fast as many people thought. And I would say that's a couple key reasons. One is not everybody has payments problems, right? I mean, and I don't really wake up every day and think I'm trying to pay for things and I'm having trouble doing so, right? In certain jurisdictions, people have those issues. Throughout much of the developed world, not really, unless we're talking about international payments. And then in addition, most governments make every Bitcoin transaction taxable. So you have this big accounting overhead if you want to use it like that. So it's that's not really where it's gravitated to for a while. And instead, the store of value property became pretty dominant, which is, okay, I want to hold this thing that they're not making more of, and that is getting better over time as programmers keep building new layers and applications and things for it. And I think, I mean, at the long run, both are useful. I think, generally speaking, it doesn't become a commonly used medium of exchange until people already have pretty large cash balances in it. And probably then the volatility is lower because if 10 times more people hold it, there's like less individual whales or leverage or offshore stuff that could just blow up and then, knock 10% overnight or 20% overnight or more. So I think as it becomes larger, more liquid, more people have these balances in it, they're more likely to want to use it. There's more people in a country that then petition their government to change the tax structure around it. Maybe you exclude the first, certain amount of transactions from being taxable or things like that, or or you go full El Salvador and just make it legal tender. But I think countries are going to move at their own speed, and over time it can also be more and more of a common medium of exchange. So I think it goes through different eras over time, and both of its attributes are important.
We are seeing now Bhutan and El Salvador. Some people are saying, "Oh, it's too late. You missed the train because we've gone from zero to $70,000." I mean, how early do you think it is? Like, do you still believe we have a huge amount of growth?
Yeah, I think it generally diminishes, but I still think that the total addressable market of good money is arguably the biggest or second biggest market out there, along with real estate, right? So, if you look at there's 900 trillion in estimated assets in the world. And so we're like less than 1% for Bitcoin. Even gold at something like 20 trillion now is tiny compared to global assets. Some of the areas that are shockingly big are fiat currencies and bonds. I mean, there are hundreds of trillions of dollars of value, and I think a lot of that is better served in Bitcoin. And just people, obviously got high volatility, which keeps people out. It's got technological uncertainty. I mean, it's a 15, 16-year-old project. So, people, nation states don't put their like, $1 trillion sovereign wealth fund aggressively into it until maybe it's 30 years old and it's 10 times bigger, right? So I think, and the way that I've described this before is that it has to reach certain thresholds before it even becomes interesting to higher thresholds. So back when the market cap was like $1 billion and it was pretty illiquid and like literally like one wealthy person could just buy in that day and move the price, that's not interesting to sovereign wealth funds or BlackRock or billionaires because it's like it's just too small and illiquid for them to even put a significant amount of their capital into it. But then when it starts to become bigger, and they can say, well, I can actually layer into this asset at a meaningful amount for me. And there's a like I could be fairly certain that I'd be able to sell if I needed to because the liquidity would be there. And then higher level, then even bigger pools of capital can say, hey, this is actually, worthwhile being on our radar now. Um, and so I think I don't really look at it in terms of Bitcoin price. I mean, the unit numbers are arbitrary. The decimal point could have been somewhere else. Um, and instead, it's more of like, what is the network worth? Right. So the fact that it's only like $1 trillion in change right now for market cap, I think is tiny compared to what it could be worth in 10, 20, 30 years. So the question is that I ask myself is there anything that would derail this? What is the probability that something replaces it or breaks it or otherwise just it doesn't work? And if none of those things happen, then I think the network value is likely far north of here in 10, 20 plus years.
Do you think people are going to adopt it as a reserve? We've seen Trump in Nashville, for example, saying, if I'm elected, I don't generally trust politicians because when they open their mouth, they lie. But having seen people in different environment mentioning these things, it's like, wow, down, it's getting interesting now. So people are talking about it in different contexts, right? You have people on TV, you have Larry Fink, all the skepticals, they're now coming out and say, well, I didn't know what it was. Now I studied it. I kind of like it. So how far do you think, or how likely do you think it's going to be for like a country to make it, maybe not the US to begin with, even though El Salvador has done it already, to say, hey, monies are backed by nothing. In the 70s, we had gold, which we took away. So maybe Bitcoin could come in handy.
I think we'll see more. It's hard to judge the time frame. There's about 200 different sovereign jurisdictions. Generally speaking, you'd expect smaller ones to be a little bit more agile in this regard. So, for example, El Salvador, Bhutan, um, there's fewer decision makers that have to be involved to like push something like that. And they're not the incumbent powers, and so they have more of an incentive to like let's try this new thing out. like we're not going to put our entire reserve into it, but this technology seems to be useful, so we'll leverage it. And so I think that especially starting with smaller countries, I think it's silly not to. Like, I think the only wrong number is zero, which is if a country just has zero exposure, I just think, especially if you're a small, nimble country, like, there's an opportunity here. Same thing for corporations that are doing things like what MicroStrategy did, what MetaPlanet is doing. There's clearly an arbitrage there for corporations that exist in pretty big liquid currencies to basically borrow the thing that loses value and hold the thing, conservatively that gains value. I think there's a lot more opportunities for that, and it's hard to judge the time frame. But as accounting standards have improved, and as some countries have done it and then had success stories from doing it, um, it just kind of normalizes it. And then again, you hit certain sizes and certain liquidity. Um, so I think especially once we're over like 100,000 per Bitcoin and have a whole nother cycle under our belts, there's more fertile ground for, various small and medium countries in particular to get in.
What's your stance on ETF? Like, I've heard so many different options, and some people are loving it, some people are hating it. What do you think about ETFs?
I think they're inevitable. I think it's just like any big liquid asset is going to have ETFs. So if Bitcoin can't deal with ETFs, it wasn't even worth owning for the past 15 years, right? Now, you still have to think, okay, is Bitcoin good enough in a place, technologically speaking, that that holding it yourself is workable and attractive, compared to letting someone else hold it for you? And if not, then what can be done to keep improving that in various ways? I mean, that's why I do Bitcoin venture. I'm a general partner at Ego Death Capital, so we're literally funding companies that are trying to improve the ecosystem in some way. But I think ETFs are inevitable. I think that basically they're pools of capital, especially in retirement accounts that literally don't have another way to get in. This is this is like they have a existing brokerage and they want to be able to buy an asset and they don't want to hold the keys. And I think that not everybody wants to hold the keys, kind of like how not everybody wants to fix their own car. Not everyone wants to, be a handyman around their house. And some people just don't really want to hold, they don't really want that sovereign property. And I think it's something worth monitoring. And then also, like, GBTC existed for years as a adjacent to an ETF, and it got over 600,000 Bitcoin in it at one point. And so a lot of this current ETF accumulation is just money flowing out of that and into other ETFs, which are still ultimately mostly at Coinbase. And so I think that there's risk of concentration, but it's not as big as people think because like it's not that much more coins in these things than there were, 3 years ago when it was just GBTC. So I just think it's inevitable. It's pools of capital are going to do that. I've described this as like an API into the fiat system. People have these existing brokerages, and this was like an upgrade that the fiat currency system decided to make to plug into Bitcoin. It's not something that Bitcoin decided. It's something that the BlackRocks and the SECs of the world decided, and so they opened their system to plug into Bitcoin a little bit more than they did a year ago.
I also believe Bitcoin is money. So then if I state Bitcoin is money, but we can have ETFs, well, then I'm choosing who can and who can't use money. And by definition, Bitcoin cannot be money. So I'm open to the free market. And if this test is going to break it, well, then it means probably it is not what I thought it was. I completely agree with you. And when it comes to energy, there is always like back and forth. Bitcoin energy consumes a lot of energy. Do you think is energy efficient?
I do, yeah. I think, I mean, basically it's one of the purest forms of proof of work. I mean, ultimately gold is proof of work. It's just like abstracted proof of work. You put in a ton of energy, you move tons and tons of rock, and then you get these little gold flakes, and then you refine it down, and you get this little gold coin. It took a lot of energy input to get that gold coin. And Bitcoin is basically the same thing. And it's also, it's processing hard to reverse settlements, which is valuable. And it also has the byproduct that Bitcoin mining happens to be the most flexible load that we have so far. So most types of electricity consumption You want the electricity right there. Like if the electricity were to go off during this podcast, we would both be heavily inconvenienced. We're not like optional for when we want it. We want it right now. And when we're sleeping, we care less. But there's certain periods we want electricity. And most businesses, I mean, if you have all your employees in, all your equipment is paid for, you owe debts on some of your equipment, you don't want like your power going out and then you have to like take off that day. Whereas Bitcoin mining is so flexible because they can go in and say, look, we want the lowest price for electricity. But if there's like little spikes of demand that push the price up or a little, we'll shut off that time. It's not a big deal. It's employee light. It's capital moderately intensive. Mostly it's electricity cost sensitive, and so they can be really useful. So I think it's good for the grid in the long run. I think anything goes through kind of growing pains. So when Bitcoin goes up, 20x in the course of a few years, that can lead to these little pockets of inefficiency and overbuilding and even cause some power issues in a given area. But I think as this becomes just a normal large part, then it just kind of settles in. And I think if anything, the funny thing is that the electricity like consumption of the network in the long run won't be as big as people think. And therefore, if anything, it'd be nice if it was bigger because it probably could help smooth out the grids better if it was bigger. So I don't really view any issues with it at all in terms of energy consumption.
It's funny because when people talk about energy, I'm like, okay, well, so is Christmas energy efficient? It's leaving TVs into a store on 24/7 energy efficient. I mean, there is always something to debate when it comes to,
Yeah.
and as far as I'm concerned, I'm actually putting energy into this asset, which means when I sell it or when I trade it, the person who's going to receive it is going to get my energy. So nothing is
Yeah.
really wasted, I don't think, over there. And you mentioned proof of work, and I'm sure we agree here, Bitcoin is not crypto. So, how do you feel about proof of stake versus proof of work? Because they are fundamentally different. Do you think one is better than the other?
Well, I think especially for money, proof of work is better. It's more robust. I mean, my issue with proof of stake is a little different than most people frame it, which is that I view it as circular logic. So, who are the stakers? The ones who hold the coins and that are staking the coins. So basically, the ledger is saying who stakers are, and then stakers are updating the ledger for the next, so they're kind of gatekeeping who can even become a staker. And if let's say the network has a critical bug and goes offline, which a number of these have done, then the question is, well, that was like a perpetual motion machine that kind of made sense while it was running, but now that it's off, anyone can create an infinite number of different, paths to the ledger, and there's no energy input. So you have to kind of literally just get together in a room and decide what is the state of the chain we're going to restart from. Whereas I think having that external component energy makes the system more robust and it makes it not circular logic. You know, my defensive proof of stake is kind of two things. One is if you wanted to have a smaller network that you don't want to be brute force attack, the price to attack a proof of stake network is pretty high. You have to keep buying coins and it drives the price up. And two, it's efficient and fast, which if you're trying to run something like a stablecoin network or some sort of thing where you're not trying to make the most bulletproof decentralized like thing around and you just want this thing that's like this open source ledger thing that just kind of works, then I'm not gonna raise issue about whatever sort of like mechanisms they really want to use for that. I just think it's not suitable for Bitcoin and for like the soundest digital money that you could build.
Do you buy into crypto at all? I mean, I separate Bitcoin from crypto. I'm sure we agree in here, but in my head, those are two very separate things. Do you see a market? Do you see coins coming up and solving quote problems like IDs and all these things? Do you see a value in altcoins per se?
So for the most part, no. I've been clear that I've been bullish on stablecoins for a while. The broader topic is just any like real world assets, right? So it could be tokenized gold, it could be tokenized T-bills, tokenized dollars. That's what a stablecoin is. Basically, there's in financial history, there's always been euro dollars, which is dollars that exist outside of the U.S. banking environment, not just in Europe but elsewhere, even though they're called euro dollars. And stablecoins are just kind of the latest iteration of euro dollars, and there's a demand for it, and it's like offshore banking for the middle class, right? Because it kind of reduces the overhead of someone in Argentina or Egypt or Lebanon accessing dollars if they want that for whatever purposes they might want that. So I think stablecoins and networks that run stablecoins have relevance for probably quite a while. When Salvador wants to issue debt to have a hotel built, and they don't really have domestic capital markets, and then they put it on a either layer on top of Bitcoin or even they put it elsewhere. I can see value in that. There's been interesting research. Like there are programmers on other networks that have they've pushed forward the computer science of rollups and things like that that eventually can find their way to Bitcoin in some capacity. So I think that it's partly going through this iterative process to see what works. There's a lot of scams there, obviously, but yeah, the short answer is that outside of Bitcoin and stable coins and these little kind of research niches, I've been publicly skeptical on the value of most of that other stuff.
Most of my portfolio, if not all of it, is basically Bitcoin. I like to have a small percentage where I speculate, but it's so insignificant that it doesn't actually impact much. It's like going to the casino on a weekend and have fun
Yeah,
and gamble on the roulette, So that's
yeah.
why I have it. And when it comes to broader adoption for Bitcoin, I mean, I'm gonna think about in cycles. So in 8 years or in 2 cycles, where do you see it going?
2 cycles. I mean, I would like to see it in the high six figures per coin by then. There are certain decision points that can just change everything, right? So I mean, if we do get a president that wants to like make a Bitcoin reserve, however unlikely that is, if that actually happens, then the world where that happens in a given 8-year period is very different than the world where instead the U.S. gets enough alignment to try to like really go hard after Bitcoin and like hurt it as much as possible, right? So I don't really have like a firm price target. I think that the two things I'm fairly high conviction on are higher highs and higher lows in that 8-year period, and that I expect it to still continue to be pretty correlated with measures of global liquidity. I actually have a research report coming out later today. It'll be out by the time this airs that measures Bitcoin's correlation with global liquidity and how it correlates better than other asset classes to global liquidity. And so basically, I expect most likely that pattern to continue hold probably over the next 2 cycles. Doesn't mean it holds 100% of the time, but it that general correlation is pretty strong. And so during periods where liquidity is more constrained, I would expect to see Bitcoin struggle to some extent. It could be a bear market or it could be a sideways market. And when liquidity is pretty good, I generally think Bitcoin's probably going to do pretty well with it.
As Michael Saylor says, stay humble and stack sats. I've been doing it for 11 years. It worked out okay. And I'm
Yeah.
100% confident in 11-year time, well, maybe hopefully we'll have another chat. It's going to be the same. I should live on a Bitcoin standard as we discussed off camera. So price doesn't impact or bother me anymore. There was a time where it was bothering me a lot, right? Because especially in the beginning when you have less conviction and you FOMO in for the price and you want to be a millionaire in 3 months, but then you
Yeah.
realize sats after sats that you stack, the price doesn't actually matter much. If there is one thing you could say to someone who has never purchased Bitcoin or who's new into the space, what that would be?
Probably would say put 1% of your assets into it. Like this thing has been the best performing asset for like 15 years. It's continuing to gain adoption. The network continues to be better and more useful than it was in any prior cycle. It's portable money that you can hold, or if someone wants to buy an ETF, you can have someone hold it for you. Um, and it's just a useful asset to have. And that it kind of becomes once it's kind of big enough and liquid enough, which I think we've reached it now, it's more of a statement to not own any than to own a little bit. So, like, you'd have to have high conviction that it's not a good investment to not have like 1% of a portfolio in it. So that probably my selling point is like, why not? Because it kind of gets weird after a certain point.
I would love to stay here all night with you, but I know you're super busy and I promised you 1 hour, so I'll stay in my promise. Thank you so much, Lyn. It's been an absolute pleasure having you on the show. I really appreciate it.
Thank you for having me, and yeah, we'll see. Maybe we'll revisit this in some years and see how some of this turned out.
I would love to do that. Again, guys, thank you so much for watching. I will see you on the next one.